Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at 3 stocks that top analysts say are their top picks for the rest of this year. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we're looking at 3 stocks that top analysts currently have ranked their top picks. So these stocks come in with strong buy ratings from 5-star analysts with some pretty attractive upside potential. We're going to take a look at what it is these companies do and what these analysts are predicting for their stock's future. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Let's get right into these 3 stocks. First on our list today is a social gaming company called PLTK. Trading under the ticker PLTK, they're currently priced at $27.44 per share. PLTK just went public back in January and remains one of the biggest IPOs of the year. They put out over 18.5 million shares on the market and opened up at a price of $27, which was well above the $22 to $24 range expected. The IPO raised $1.9 billion, and PLTK now has a market cap of about $11 billion. PLTK is in the digital entertainment world with a wide portfolio of online and mobile gaming titles. The company has over 34 million monthly active users who participate in a variety of games offered on the free-to-play, pay-to-upgrade model. They're also one of the originators of live game operations, offering users personalized daily game experiences with new events and exciting new features 365 days a year. PLTK also just announced that they'd be entering the design entertainment world with the acquisition of Reworks. Reworks is the maker of Redecor, which combines home design and gaming into the #2 design entertainment app. This acquisition furthers PLTK's growth strategy while providing it with a large and highly engaged community of design enthusiasts, a demographic similar to PLTK's existing user base. In August, PLTK shared their second quarter financial results. Earnings came in positive, with a company net income of $90 million compared to the net loss of $139 million in the year-ago quarter, although their earnings per share of 22 cents did miss the estimates by 1 cent. At the top line, the quarterly revenue of $659 million was a company record and beat the street's estimates by $15.7 million. PLTK finished the quarter with an enviable liquidity situation, including cash and cash equivalents worth $1.18 billion, along with an additional $600 million in available capacity on a revolving credit facility. Their daily player conversion increased to 2.9%, up from 2.7% compared to the year-ago period, and they saw a continued growth in casual games, which now represents 48.5% of their overall revenues. Weighing in on the PLTK stock is Doug Kreutz, a 5-star analyst from Cohen & Co. He says that we believe PLTK is a top-tier operator in the attractive mobile gaming market. The company has shown the ability to grow both organically and through acquisition. We believe the company's Boost platform provides operational advantages that improve customer retention and monetization. We expect the company to continue to grow its existing titles, begin launching new titles in 2022, and continue to engage in value-creating acquisitions. Kreutz makes PLTK his top overall pick. And Kreutz isn't alone. There are 4 other analysts that have a rating on the PLTK stock, and they all come in as a buy. Their average price target of $40.40 would be an average upside potential of 47% for this next year. Our price targets range from an upside of 31% all the way up to an upside of 60%. Second on our list today is a company called SHLS Technology. Trading under the ticker SHLS, they're currently priced at $33.15 per share. SHLS Technologies is a producer of electrical balance of systems, or EBOS solutions, for solar energy projects. EBOS includes combiner boxes, junction boxes, splice boxes, inline fuses, racking, PV wire, cable assemblies, recombiners, and wireless monitoring systems. These and more are the necessary gear to carry the current produced to the inverters and then onto the power grid. SHLS products were used on approximately 50% of all U.S. solar capacity installed in 2020. They sell patented products that are less costly to install and more reliable than competing solutions. They focus on selling complete systems rather than individual components. Their mission is to create products that can be installed by anyone and to move assembly from the field to the factory, then leverage the factory environment to produce products with superior quality, reliability, and safety. Their combine-as-you-go system solves the issues with conventional home-run EBOS. And the advantages of this is that it can be installed by anyone and that there aren't any electricians required. It enables above-ground installation, reduces wire runs dramatically, eliminates combiner boxes, increases safety and reliability, and reduces maintenance requirements. They're also making moves between another big niche, and that is electric vehicle charging. Their initial EV charging product line will include 4 product families, including skid solutions, raceways, EV BLAs, and charging skids. They're going to target a 20 to 30% reduction in installed costs versus conventional solutions. They currently have field-deployed prototypes for their first customer with Phase 1 products, and for Phase 2 products, they're being designed and prototyped. They're expecting first sales in this fourth quarter of 2021. SHLS also went public in January of this year. The company raised $1.9 billion in new capital after putting 77 million shares on the market at $25 per piece. In their 3 quarterly earnings since going public, they've been steadily increasing their top-line revenues. They shared their Q2 earnings report just last month. Their revenue came in at $59.7 million, up 30% sequentially and 38% year-over-year. The increase was driven by revenues from system solutions, which rose 62% year-over-year. At the end of the second half of 2021, SHLS reported a 63% increase in backlog and awarded orders compared to last year, a development that bodes well for the company going forward. Weighing in on their stock is 5-star analyst Mark Strauss from JP Morgan. Following their quarterly release, he said that we believe the print offered no drama, which should be viewed positively by investors recently concerned about potential supply chain-induced project delays, timing of new product introductions, or by the recent first follow-on equity offering in our view. Management tone remains constructive, growth opportunities are abundant, and the firm seems to be executing well by developing new products, expanding into new markets, and signing new customers. We continue to highlight the SHLS stock as a top pick within our coverage universe. The SHLS technology stock has 9 current analyst ratings and comes in as a strong buy based on 7 buy ratings, 2 holds, and no sells. The average price target comes in at $41.56, which would be an upside potential of 25%. On the low end, we have our hold ratings with an upside of just 1.67%, and on the high end, a target of $47, which would be a growth potential of 40%. And last but not least on our list today is payment processing company PAYA Holdings. They trade under the ticker PAYA and are currently priced at $10.93 per share. PAYA's services include integrated solutions for business-to-business payments, and the company claims customers in the education, government, healthcare, and utility sectors, as well as nonprofit corporations. By the numbers, PAYA processed over $30 billion in payments last year and boasts over 100,000 customers. PAYA Holdings went public last year in October via a SPAC merger. They merged with FinTech Acquisition Corporation 3, and the merger gave them an enterprise value of $1.3 billion. PAYA recently announced that they've entered into a strategic partnership with Paradigm, a software company focused on helping organizations throughout the building industry supply chain increase efficiencies and profitability. Through this partnership, Paradigm will launch Paradigm Payments, which will offer contractors, dealers, distributors, and manufacturers the ability to collect and process payments real time, leading to greater back-office efficiencies and the opportunity to increase on-site sales. PAYA Holdings also reported their second quarter earnings report back in August. Their revenue was up by 25% to $63.9 million, outpacing the consensus estimates by $3 million, while gross profit came in at $33.8 million, up from $26.2 million the year before. Their non-GAAP earnings per share of 11 cents did come in ahead of the analyst estimates by 3 cents. The company also clocked a payment processed volume of $10.7 billion for the quarter, up nearly 37% year over year. On the balance sheet, PAYA reported $135.6 million cash on hand against $250 million in total debt. And weighing in on the PAYA Holdings stock is 5-star analyst Mark Palmer from BTIG. He is bullish on the PAYA stock and believes that part of the reason for the stock's underperformance is due to SPACs falling out of favor. Investors, however, should take advantage of the depressed share price. He says that the stock is our BTIG top pick for the second half of 2021 in the small mid-cap category, as we believe PAYA's growth story is intact and that the yawning gap between its operating performance and its valuation is unwarranted. That gap has created an attractive opportunity for investors to gain exposure to a well-positioned integrated payments platform at a bargain price in our view. The PAYA stock currently has 4 analyst ratings and comes in as a strong buy based on 3 buy ratings and 1 hold. The average price target comes in at $14.50, which would be a 32% upside potential. On the low end, we have our hold rating, which would be a slight downside, and on the high end, we have Mark's price target of $18, which would be a growth potential of over 61%. So there are 3 top analysts' top picks. I'd love to hear from you guys what you think of these 3 companies. Were they on your list at all, or what are your top picks for the second half of 2021? I always love hearing from you guys, so make sure to leave your thoughts in the comments down below. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please always make sure you're doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.